You are 15 times more likely to be audited if you are just operating as an LLC. Now, that may shock you, but let me explain why. If you are an operational business, landscaper, plumber, electrician, you're selling online, and you're just an LLC, that means you're reporting as a Schedule C, or a single member LLC, or a disregarded LLC. When that's the case, yes, you are more likely to be audited and 15 times more likely to be audited as a Schedule C. However, you're also paying way too much in tax. So what's the solution? You move to the S corporation. When you take your LLC and tax it as an S corporation, you're still an LLC, but you're taxed as an S corporation. Now, your chances of an audit went down by 15 times, and you're also going to be saving on self-employment tax. Get over and watch my other video on why to operate as an S Corp LLC. But if you're just a plain old LLC, buckle up. You're paying too much in tax, and you're probably going to get audited.
How do I backdate my LLC to an S Corp? What form should I use? The form you use to backdate is the same form you use to make an S Corp election in the first place. It's called Form 2553. Technically, that S Corp election is late in the sense that typically it's due back in March. You have until, within the month of March to make that S Corp election and still be considered an S Corp for this year. What they allow, though, on those Form 2553s, a reasonable cause argument. If you have some sort of reasonable cause as to why you didn't make an S Corp election, you didn't know to, anything like that, you can make that case on that Form 2553. And usually those reasonable cause arguments are accepted by the IRS. On that form, you'll find an effective date of your LLC. So whenever you want your S Corp election date to start, you add in that date on the Form 2553. You're not done though, because the thing about S Corps is while you're an S Corp, you're required to run payroll. Since you've backdated your S Corp election, there's a time period where you haven't been running payroll because you can't go back in time, right? So you have to run back payroll. You got to go back and you have to reclassify some of your earnings as W-2 salary, and you got to reclassify some of your earnings as distributions. That's important. You also have to include a balance sheet in your bookkeeping. Before you become an S Corp, you're not required to track a balance sheet, but you are when you make an S Corp election. So if you haven't been tracking a balance sheet, you got to go back and clean up the books until the start of your S election date and include a balance sheet. So to backdate an S Corp election, there's a lot of work involved. It's not just simply filing a form. And I would urge you to not backdate an S Corp election on your own. I would suggest that you go to a tax professional, get some guidance, or even have them do it for you.